Hey there, guys. I want to quickly go over my portfolio. Um, let's see here. My dividend income that's projected. It's right here on my right here on the screen here. Let's see. It should pull up. Looks like 9159 projecting. That kind of shows month to month what they're projecting as my dividends. Um, but so real quick here. I was trying to figure out what was going on with my portfolio and why I seem to keep adding money and not getting anywhere. It's just like treading water the last month or so, and adding money, selling covered calls, collecting dividends, and it's like staying about the same. And I looked at it, and I'm down $10,000 the last month in my portfolio. Man, that's a lot. Um, the dividend value stocks jumped their uncharacteristically way too high, really fast for some reason. And since then, they've just been kind of going down, going down, going down, going down. They dropped right away, obviously, but then after that, there was a just they just keep going down. So hopefully, we'll get a turnaround. Also, I have other money in some that isn't listed there is in some puts, so that's why they're not listed as stocks I own. Um, Real quick, kind of go through what I own here. I own one position of AGNC, which is a monthly dividend stock. Pays, it looks like it's about 11.37%. AIG, I own two positions. AIG is insurance. AGNC is a weekly option stock. AIG is a weekly option stock, and I sell weeklies on both of those. Every week, I collect premium on those stocks. Sometimes I'll do a 2 week, especially like AGNC, the lower value ones, to try to get the dollar amount I want for the most premium I could get. Ares Capital, I own one position, and that's a monthly option stock. You can see there on the far right, you can see the dividend yield as well as the dividend safety score. BP, I own one position actually. It says two there. And it's a weekly option stock. And it's got a really high dividend right now. I wish I had some more money to buy BP, but I just have too much energy stock. I mean, I'd love to buy more BP at that price at $22 with 11.34% dividend on your money for a long time. I believe BP is going to continue to pay their dividend. They just paid it. I believe they're going to continue to pay it. Dow Chemical on two positions. You can see there it's a 7.1% dividend, and it's a weekly option stock. I sell a lot of Dow is very volatile. I sell a lot of covered call options, and I get a lot of premium from Dow Chemical. EPD Enterprise Products. I have three positions. And it's got a 10% dividend, and it's got a pretty good for a 10% dividend. It's got a pretty good dividend safety score. ET, I have 16 positions still. ET's just plummeted. It was going down. It's going down. Then they had these news about the pipeline news, and everybody overreacts. I don't think that one pipeline's 10% or 15 or 20% of ET's business. Not sure we need to drop the ET down 15% on this poor news. It bounced back up some, but ET's dividend's really high, and I believe they plan on paying it. And they paid it last quarter as well. But I'm looking to roll out some of my ET stocks as soon as it gets closer to my original price. First Horizon, this is an insurance company. I have one position, and I believe it is a monthly option stock with a nice 7.18% dividend, and it's got a 44 borderline safety score. GM is my only stock I have that does not pay a dividend. I believe if a stock is going to cancel its dividend, lower its dividend, I don't want to own that stock. Unless there's a damn good reason. The reason I own GM, I believe GM's going to bounce back up. I don't know about its dividend coming back. But, if you're going to cut a dividend on a stock, that stock's just going to plummet. I mean, I don't want to invest in companies that are the first thing they do when things don't look great. They just start cutting dividends and cutting things left and right. If that's how close that they're working, the margin they're working on, I don't need to invest in that company. So Hewlett Packard, I have one position. It's got a 4.29. It's a weekly option stock, and it's got a 74 as a dividend score, safety score. KeyBank on 4 positions, or almost 4 positions. It is a weekly option stock. Of course, I get a message that has to come through right now. Okay, we'll make that go away. And it's got a 50. KeyCorp is KeyBank, 6.71%. Kinder Morgan, it is a weekly option stock. I have one position, working on 2 positions actually in Kinder Morgan, 7.55% dividend. Again, it's a weekly option. Coke, I have one position, and it's a weekly option, and I get a lot of premium off Coke. Main Street is not an option stock; it's a dividend stock only. And this is another one. Main was up to $35 just a month ago, and it's dropped down to $28.66. I mean, it's totally like overreaction. I think what's going on is people see that this pandemic's going to be longer than they thought. There wasn't going to be a quick out of it, and so they've just kind of sold off all their value stocks. MetLife, I have 2 positions with a 5.2% dividend, a 79% safety score. It is a weekly option stock. Alteria Group, I have 1 position. I want to get another position on Alteria Group. That's something I'm going to work on in the near future. It's got a 55 safety score and an 8.7%. And again, this one pays a very healthy premiums. Nokia, I just have 1. And Nokia, I think maybe just canceled their dividend because I don't see it listed there. So that tells me it probably cancels dividend. That's probably why the stock has dropped from $4 and something down to, it was like $4.50 or $4.60, and it just went down to $4.17. I'll probably rotate out of that, sell cover calls. But I just have 1 position. It wasn't a big position, obviously. It was just $400 and something dollars. OLN, I have 1 position. It is, let's see here, it's a chemical company. It's got a 42 safety score with a 7.58% dividend, and it is a weekly option stock. Plains All America, I have 2 positions, and it's a pipeline company, midstream. I own, again, 2 positions, 8.57, and it's a weekly option stock, and it's got a 48 dividend score. PBA, another pipeline company with an 80. That's pretty high for a pipeline company, midstream company. 7.93 is the dividend, and I own 1 position, and it is a monthly option stock. Pfizer, I own 4 positions. I sell a lot of premium is coming from Pfizer. 4.54 dividend score, or dividend percentage, so 75 again is a dividend. This is a kind of a new holding for me. Regions Finance, I have 1 position. I believe it's a monthly option stock, and it's got a 6.31% dividend and a 50 score. Southern Company, I have 1 position. It pays really good premiums on its weekly coverage calls, and 4.93% and a 65. SPHD is not rated because it's an ETF and it's a bunch of stocks together into one to form stocks, so that's why they don't rate it. I have 1 position. I sell monthly covered calls on that. Actually, I sell usually about 2 weeks left in the month, in the option month. It's got a 5.77% dividend, and I just try to see where the stock's at and where I feel comfortable selling that option, where I think I'm going to stay out of the money and be able to collect a decent premium. And so if I can wait till halfway through the month, I feel more secure on being able to keep my stocks. Starwood Property. I own one position, and it is a monthly option stock, and it's got a pretty low dividend score at 30, with a 14.4% dividend. AT&T, I have four positions, 7.04 dividend, 65 rating. UGI, it's a monthly option stock. Obviously, AT&T is a weekly option stock, but I didn't say that. 4.42% dividend and a very, very safe dividend score 99. That's the highest it gets, by the way. Viacom, four positions. It's got a 4.34 dividend percentage and a 50 is the safety score. Chevron, I have one position. It's got a 8.41 Exxon. I have one position, and it's a weekly covered call stock. So it's Viacom, if I didn't say that. And Exxon, it's got a 8.41% dividend, 55 safety score. So with my puts and with my put options, premiums, as well as what I'm collecting here off these weekly options and monthly options, I'm able to generate just around $1,000 a week in premium options out of the money. So we're not talking about selling your option the one deviation up. We're talking two or three. And I really try to keep my stocks. And one thing that I watched some of these covered call people talk about a lot is buying their option back. Roll out, for God's sakes. Like, for example, Pfizer jumped up last week to around $34.50, and I had a $34 cover call on it, and I rolled out. I just left it at $34 and sold it again for the next week for the exact same price. Collected a premium, and I collected like $120 in premium on Pfizer for rolling it out, and now looks like it's going to probably close below that $34 strike price, which I thought it would do. I thought it would bounce up and then just come back down like a lot of times it does when they get good news and stock jumps one direction. So, learn to roll out, for goodness sakes. It's not that hard. I mean, just buy it and sell it. It depends on what platform you're on. If you're on Robinhood, it's the simplest thing I've ever seen in my life. You just buy one to get out of it. So buy your option back, and then you sell the next week's option. And it will tell you how much it's going to give you. You can see the difference in the price. You lose a few cents here and there because it doesn't necessarily always match up. So if it says it's going to give you 25 cents per share for the option for the week, most likely you're going to have to go down to around 23 or 22 to get it to fill. And so, but yeah, learn to roll out, for goodness sakes. You don't have to buy it back. You don't have to lose your stocks. Just roll out of your options to the next week, and see if it bounces back down, which it usually does. And so there's my 2 cents. Again, it's a Simply Safe dividend. It's free for 2 weeks. And then after that, I believe it's around $3.99 a year. And so can give you where I'm at, and right now I'm looking to fill another position of the two things I'm working on, because I have two different portfolios going in two different platforms. On my Charles Schwab account, I'm looking to fill a KeyBank position, so I'm about halfway done. I don't think I have it listed here as, so I have about 350 shares, not 400. So hopefully by the end of next week, I'll have 400 shares. I don't add any money to my Charles Schwab. I add all my money into my Robinhood account because I think the options are the easiest and they're free. And options are not free on every platform. Even though they'll tell you that, they're not free. They charge a fee. And like, for example, on Charles Schwab, they charge me 65 cents per option. And I trade probably 100 to 200 options a month. And so you can tell that it's not free or even close. I'm paying hundreds of dollars on Charles Schwab to trade options. And it makes it really hard to grind out those little options. Like today I was buying options You know, as the market dropped in the last week, I bought my options back for, you know, 2 or 3 cents, and I sold them back out again for closer to the money to collect more premium. So for example, if I had a $32 option and my stock dropped down to $29, I bought it back at 32 for 2 or 3 cents, and then sold the 31 to collect like 10 cents or 12 cents to collect more premium. So I just started really doing that this last couple of weeks, and it's especially when the market's going down, it's a way to collect additional premium. But you know, be careful. You want to stay out of the money. You know, a lot of times you'll have, when it goes down, down, down for 3 days in a row, you'll have a big up day, and so you have to be prepared for that. Don't get too close to the money. But that's my 2 cents. I hope that helps you guys, and I'll update more in the future. Okay, thanks.